Welcome to the B.F. Anderson Technical Report for October the 13th. I wanted to take a few minutes this morning to talk about interest rates. It appears that the bull market in bonds that has been going on since 1982. Take a look at this long-term chart that we have here. You can see where the 10-year U.S. Treasury note, the 30-year U.S. Treasury yield peaked in 1982 and has been declining ever since, hitting an all-time low in 2016 of around less than 2%. And we are now starting to see a breakout above that downtrend line, and I wanted to go on to the next page here where we're looking at a more current graph of the 10-year Treasury yield. Now, in a recent interview on Bloomberg, Bill Gross of Janus Capital is of the opinion that the bull market in bonds is going to be over, in his opinion, if the 10-year yield crosses above 2.4 to 2.45. Now, if you look at the graph, that does make a lot of sense because you got the tremendous drop here earlier this year, which is the crouch, and now we're starting to see a move up. Now, you can also see that will break a couple of highs that were established earlier in the year. So if the bear market in bonds begins, does that mean that capital will shift away from bonds and into equities? Well, I hope so. Now, let's look at the top 10. Align Technology continues to make the list. This stock has been an absolute tractor. It just keeps plowing along and making new highs almost on a daily basis. This is a very interesting technology. In fact, my wife was telling me the other day that my son's teeth need to be straightened, and he actually went to a orthodontist here in town who deals in this technology and has recommended it for my son. So I'm actually going to be a user of the product, or he will. I hope he pays for it. Here is a biotechnology stock, still not really up to speed on this one yet, but I do know it's biotech. I do know they're involved in cancer treatments, but I've got to tell you, these companies are coming out of the woodwork. Every day I learn about a new and a different one. Here's a graph of Bitauto, which is a Chinese automobile-related company. In fact, I watched a video yesterday on YouTube that was produced by them. They mainly handle all the advertising in China. You know, I've been doing quite a bit of research on China, and there's really a lot going on there, and their economy is doing extremely well, and I think it's just an area you've got to stay focused on. Now, again, good old Nvidia. This has been a really good one. Another tractor. They just announced a new computer used in autonomous driving. In fact, they're working on a contract for this computer to go into taxi cabs, which will be totally autonomous. This is what we call a level 5 computer, which means level 5 autonomous, which means fully autonomous. So it looks like Nvidia, as far as the technology behind the automobile industry, going into the autonomous mode. But it's going to be more than automobiles. It's going to be trucks, trains, and basically airplanes already have autopilot, and so the point is Nvidia continues to make new highs. In fact, I noticed this morning that their estimates were raised, and the price objective was raised by Goldman Sachs. Now, here is a stock that I'm just really happy about. It's just made the list. We do own this stock, PayPal. I've been involved in PayPal for quite a while, and I don't know if you guys remember Shopify, but this is all about helping the small businesses of the world get on the e-commerce platforms and have a payment system. And so we hear a lot about Bitcoin and other currencies and other, blockchain technology and so forth. Credit cards are here in the United States. They're going to be here for a while. I don't see the credit card going away. And PayPal and MasterCard and Visa are completely linked to each other. But the stock has made an all-time new high, and there was an analyst here recently that increased his rating on the stock. Now, I want to take a quick minute to go back in time and look at some history here. And I want to remind everybody about the 7.5% rule, because what I did is I went back and I looked at the 7.5% rule for the past 10 times that this has happened. Now, this rule was developed by my friend Mike Centolo of Cabot Research, And it really is kind of an interesting study. It's a blast-off indicator. It's basically saying that when the S&P 500 exceeds its 35-week moving average by 7.5% or more, it is a meaningful event. So you just kind of have to go with that. Now, if you go back and study the 10 prior occasions, the buy signal that was given in 1985, which was right in there. You can see where the breakout came. It was interesting because you have to realize the market between 1966 and 1983 absolutely went nowhere. It was just a completely uneventful, boring, trendless market. Well, then we break out in 83, and then if you notice on the graph, between mid 83 and early 85, we had somewhat of a mini bear market. And then we've got the 7.5% rule, and the market went up dramatically. In fact, I've noted here that in 1985, the signal came when the S&P was at 175, and by 1987, when it peaked, it was at 325. So we're looking at close to a double there. So it's the interesting analysis is nothing more than just trying to look back in history, because if you really think about it, you can't predict anything in the stock market. There's no predicting. It's just a waste of time. So you want to do trend following, which is looking for trends and following them and understanding them. But then also you want to look at history, because that's really all we have. So if you look at our current situation, we basically broke out of a trading range around 2013, and you can see on the graph if you go to the right side, and then we had somewhat of a mini bear market, just like we had back in the 84-85 period. And then we get the 7.5% rule breakout on February 22nd. So it just looks incredibly similar. And, Reagan came in back in the 80s. Now we've got a new administration. It's a lot of economic similarities. The big difference here was interest rates in 82 peaked, whereas right now interest rates are troughing and making a low. So there is somewhat of an interesting correlation here. So if you have any questions, give me a call, but I really think this is an interesting looking bull market, and we're hoping for the best. Thank you.